Joining us for a further look on what's playing itself out in that market scene is Wayne McCurrie from FNB Wealth Investments. Wayne, always a pleasure. Good afternoon to you.
Yes, good afternoon.
All right, Wayne, there's a lot happening here in South Africa and around the world. I see the JSE is all in the red. I don't think Europe is faring much better today. What are markets contending with this afternoon?
This is all about the Federal Reserve last night. I mean, everyone knew they would keep rates on hold, but they basically signaled they don't expect a rate cut in March. And that really put the skids under shares, especially the NASDAQ. I mean, Microsoft and Alphabet, sorry, I must just wave my hands to turn the lights on for light saving. They didn't come up with bad results, but I think the market was expecting more. So, I mean, certainly Alphabet, Google, came down about 7.5%, and Microsoft, I think, about 3%. And in that environment, you can't expect our market to go up. And it's a lot better than what it was at opening. I mean, I think it was down over 1% at opening. It has now recovered and down 0.6%, as you said. And also the rand's a little bit better. So maybe we're over the shock of, or the worst of the shock of what the Federal Reserve said last night at their meeting. Of course, they may still cut rates in March. You never know. We'll see what tomorrow's employment data comes out with. If it's a good number, markets will recover their losses. If it's a bad number, unfortunately, this slide will continue. But I mean, it's nothing dramatic, but there certainly is some weakness in the market because of what the Federal Reserve Chairman said last night.
I'm also seeing a speculation, I guess, around global inflation and the impacts are coming from the Red Sea, with some analysts from the United States saying we're yet to see that work its way into the system and then out. Wayne, is that a possibility?
Look, it's quite possible, but normally the market reacts very quickly to instances like this. You don't wait 2 or 3 months for a war or an unrest situation to show itself. It's normally instantaneous. You can see when Russia invaded the Ukraine, I mean, the fruit prices shot up immediately. There was an immediate effect. So I don't think it's going to be that big. Otherwise, Brent crude would already be $86. It's not, it's $80. You know, you can hardly see any movement in the Brent crude price because of this situation we have in the Red Sea. You know, so I don't think so. I think that the effect is overstated. Otherwise, we would have already seen it in oil in particular.
Got you. The big one of the day here at home is certainly MultiChoice and them being courted, I guess, by Canal Plus here. I'm keen to get your thoughts on this. MultiChoice is, I think, just getting their strategy together. We're finally starting to understand what they're trying to do with Showmax and DSTV. And it looks like Canal Plus has slowly but surely building up their stocks and now making a definite offer.
Yeah, I think they own about 30% so far. And they've come in at a huge premium, but understand, even with that huge premium, they'll still be buying it for far less than what they bought their current 30% stake for, because the MultiChoice price has come under significant pressure. And we can all imagine why. There is intense competition in this market. You know, I know my viewing at home 2 years ago was 100% DSTV. Now it's 15%. You know, you watch YouTube and you watch Netflix. So they are under intense pressure. They've got one big card, which is what Canal Plus does, and that's local content. The Netflix and they can't compete with MultiChoice local content. So maybe Canal Plus wants to roll it out to the Anglophone countries and try and get them in there, because, I mean, that's their home market, I suppose. But they're willing to pay the price. And to be honest, if you're a MultiChoice shareholder, I think you'll be very happy with getting this offer, because certainly, in my view, the future was not that good for MultiChoice.
I was keen also just to understand, Wayne, how companies overseas see South African companies. If I think of Imperial Logistics, for instance, you know, it's bought out by DP World, and now we're seeing this offer here. So even though, you know, valuations may come across as cheap, and I guess that's part of what overseas companies are seeing, we are still seeing them put their confidence in what we build here.
Yeah. Look, South Africa's got cheap shares. I mean, we're at the bottom of a commodity cycle. Our whole market's cheap. It really is cheap. It's of the cheapest I've ever seen. And understand, when things are cheap, they're cheap for a good reason, because there's bad news around. So, you know, you don't have to look far to find bad news about South Africa, and that's why our shares are cheap. But the news doesn't always stay bad. Over the next 2 years, we could get a commodity upcycle. The whole scenario will change then. South Africa is more cyclical than, I suppose you could say, the average country. And we're just unfortunately in the down part of the cycle now. And I suppose companies with a longer term view say, we can come here, buy good assets, buy them cheaply. Why not?
Another interesting one we're hearing of today, Coronation taking a more, a commanding stake in Dis-Chem. That's an interesting one, seeing Coronation really taking an interest in Dis-Chem. Of course, that's also a really good South African business, isn't it?
Yes, very much so. And I mean, Coronation goes for I suppose they're a little bit more value orientated than a couple of other countries. So they want a couple of other managers. So they want to buy the companies when the share price, shows value to them. And they do take big stakes because they have a fair amount of conviction as an asset manager. So this is not an unusual move within Coronation's, style of managing assets.
And from a Dis-Chem perspective, could Coronation bring something to that boardroom or the AGMs that they currently don't have?
Possibly, but normally Coronation wouldn't go onto the board. They'll just participate at the AGM and in normal shareholder engagements. They wouldn't want a board position. No asset manager wants a board position because you don't actually, as an asset manager, you don't actually know much about running a company, to be honest.
And let's talk also about Glencore here, reporting lower copper, nickel, and cobalt production. It is 2023, so we are looking back, but also they are expecting that to kind of continue into 2024. Of course, Glencore, one of the strongest, biggest miners we have in the world here, and well placed for the energy transition. But like you're saying, it is a commodities down cycle.
Yeah, look, in a commodity down cycle, you're not going to produce more. You're going to generally produce less. So it's quite normal what's happening now. I mean, they did sell off a few mines, as you mentioned earlier on, and that's responsible for some of the drop in production. But it's not abnormal what they're showing now at all.
I'm keen to get to your stock pick in a bit, Wayne, but before we get there, I'd like us to reflect on counters that have found favor with your industry peers.
I'm going for Eli Lilly, and the reason is I read an article in the Wall Street Journal and it said, all these weight loss drugs, it said that it doesn't matter whether you've got coverage, meaning medical aid coverage, because they're selling everything they can produce. So between Novo Nordisk and Eli Lilly, as many injections that they can produce, we got to be politically correct about how we explain what they do. I think this is going to go on for some time until the competition comes in. Wayne made a very valid point about competition coming in. So I think there's a Business Week article. It said JBL, just buy Lilly.
Very quickly going for 91, great company. If we do get a bull market in the globe on the lower interest rates, they will benefit obviously from that. And there was this perception index that came out about asset managers in South Africa, and I think they're third or second behind Alan Gray. I mean, really good. But just the last comment on what we were discussing today, understand when you cannot find a single reason to buy a share or a country, if there's absolutely no reason you can think of to buy something, it's maybe a good time to buy. And also when you cannot think of a single reason why you should sell anything, it's probably a good time to sell.
I'm going with AVI. AVI is a very well-run and well-managed business. They've got a number of top brands in their portfolio. They play across the different grocery market in South Africa. And what we've seen of late is commodity prices and the input prices that AVI is exposed to has started to roll over, which should bode well for their margins overall. I think you will see a recovery in the INJ, which is the fishing division, as well come through. And, from a balance sheet perspective, they're very robust. They've got capacity to pay out a special dividend. And I think you would expect, not stellar revenue growth, but decent revenue growth with better margins translating into better earnings and dividends as well.
Well, Wayne, we know what you think about 91, but we're keen to get your thoughts on Eli Lilly as well as AVI.
Yeah, look, I know those two characters who spoke first two guys. Yeah, look, Eli Lilly, I mean, this new weight loss drug has been a huge There's huge demand for it. It's apparently something new. I know my mother was always discovering new ways to diet, but she never seemed to lose weight. But this is the new one that's actually come out now, and it's almost a bit like AI. You know, jump on the bandwagon because it's going to go. So I agree with David on that. On AVI, I really do agree as well. I mean, AVI has got fantastic brands. They have the ability to push margin. They can push prices to maintain margin. They're one of the very few companies in the, I suppose you can call it the grocery retail sector, that can actually push prices, and their products are so good that people still carry on buying it. And they got margin, they got volume growth. So not that they not only enhanced the margin because of higher prices, the volume growth they got through didn't suffer because they upped the prices. So this is an extremely good company. I do agree with that. And even better, it's not expensive. I think it's maybe 13 or 14 price earnings ratio, which in the bigger scheme of things for a company like AVI is actually quite low. The last comment is, I don't understand why they keep the fishing business in there. It makes no sense. It is such a volatile, completely unrelated business to the other units. But anyway, for what it's worth, I certainly agree with AVI.
Got you, Wayne. Please tell us what stock you like today.
Well, I'm going to go for a very similar one to last night. I'm just going to go for Coronation. I mean, these companies have got big dividend yields. Any sort of bull market will be great for them. Any recovery in the market will be good for them. Coronation's performance has also improved in the last while, which means more fees coming through from performance fees, more money coming in from performance fees. And also this fine receiver of revenue court case, it's already fully provided for. So even if they've only got a small chance of winning the case, if they do win, there's 100% upside. So that's why I'll go for Coronation.
Fantastic, Wayne. Always a pleasure chatting to you. Thank you so much for your time this afternoon. That was Wayne McCurrie from FNB Wealth and Investments.